Yes, guys. Yes, guys. Welcome back, traders. Welcome back to another session as we break down the charts, as we break down GBP Super excited for us to come back in again and to look at the market once again. Yesterday was a bit sticky. We didn't really get involved yesterday because we couldn't really tell whether price was going higher or lower. Or actually, we could, but price didn't really give us a move for us to really look at. So I'm going to be doing a review on yesterday's trading day, New York session, and I'll be posting that to my school community account. So if you're interested in knowing how to ignore days like yesterday, please do jump on that by signing up on the school community link in the description. I'll have all my details and all the postings and the detailed breakdowns on our school community. But saying that, we're here for a directional bias assessment, and that we will do. Today, we're looking at the Gbpusd again. We're going to apply the same rules as we did yesterday, and the aim today is stick to the rules. If there's no trade, there's no trade. Tomorrow's another day. If there is a trade, thank God, we keep it moving. Okay, so that's what we're going to do. We're going to go straight to the monthly, and as you can see, very straightforward for us today is that the monthly, you can see March has already, right, put in a high. I love this. I love the fact that we can see the monthly high. That's the lower high because we've gone high, lower high, lower high. I love that. So the first thing I'm going to say about the monthly time frame is we can clearly see monthly. We can see is bearish on the, and the reason we can see that is because we can say market structure. The market structure shows us market structure lower high has already been put in. Okay. Also, another thing is we're trading below open, TBO. We're trading below the open. Price has opened up over here. This is where price that we gapped. Naturally, you should open side to side, but we gapped down, right? We put in this high and we're trading heavily beneath the open price. I love that. And I'm also going to put the fact that we've gapped, right? There's a price gap, which also indicates that sellers are pretty much pushing this, okay? So monthly kind of speaks for itself. I got no problem there. I also want to identify what we saw yesterday was that price was rejecting off this FEG. But remember, we spoke about how price from this rejection couldn't break structure. And if you can't break structure, I have no reason trying to buy you, right? So just because it respected this level and it's respected the daily order block and the weekly order block, price from that respect point, from that rejection, couldn't break through structure to give me reason to want to go higher. In other words, if it can't break through the structure, guys, I want you to remember this. If it cannot break through the structure, then there's no strong confirmation that price could go higher. Now, price could go higher, but that's just not a risk I am willing to get involved in. Why? Because price needs to break structure. According to the way I moved in the market, I need a clear break of structure in order to believe where price is going. All right, so I'm not going to get in if there's no break of structure. So there are plenty of days where I open the charts and I basically say, this isn't for me. Why? Because if you reject off a key zone, break the structure to prove. You see, trading shouldn't be about assuming, oh, I think it's going to do this. There's an element of probability and an element of anticipation, but your anticipation should be based on what price has shown you versus you trying to go ahead of the market to assume that the market's going to do this before it actually shows its hand. So letting the market show its hand is vital. Yesterday, price didn't break structure. So although it rejected from this zone yesterday, it never gave us the break of structure to convince us that price wanted to change direction. So I hope that makes sense. So for now, the monthly is bearish. Now, if the monthly is bearish, that means I'm hoping that the rest will fall in line. Basically, the monthly is the kingpin. All right. So let's see what happens here. We go to the weekly, right? The weekly, I'm going to remove this FEG for now because I think we're trading into it. I'm going to go to the weekly, and the weekly, pretty much like the monthly, has the same type of feel. So we're not going to really spend too much time going over. We can clearly see what I love about this is that we're not just trading into this FEG, we're actually trading beneath this weekly structure. This is really, really important. So this is that weekly market structure break. So price is showing us here that when we went higher low, higher high, we are now officially trading the body of this candle is trading beneath this structure level. That is strong. That's an indication that sellers are really, 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 really strong. Okay. So for me, did we put market structure lower high? Yes, but I also want to add, whilst we're there, market price. Let me put it here. On top of the gap, we're going to say price trading. I'll just put trading below market structure. There we go. Let's put that TBMS, trading below market structure. So we've got trading below open price, maybe OP, right? And then we've got trading below market structure. That's really good. I like that. So at the moment, the monthly and the weekly are demonstrating to me that we could still be on this bearish run. Look at this. High, lower high, lower high, lower high, lower high, lower high. So all of this is telling me that potentially price is moving to the downside. Okay. Now, let's have a look. Let's keep going. Daily. So I like what I'm seeing here. We could even look at the 2-day to see if we can give us it back. It's giving us the same thing. It is giving us the same thing. So I'm not going to stress too much about that. We'll go straight to the daily. Right. What do we see on the daily? Okay. We're continuing once again that lower time frame. That market structure, bearish market structure. The lower low, lower high, lower low, lower high, lower low. All right. So we're seeing and maintaining that move. All right. Price now moves back this way, or we are anticipating potentially the price is going to keep moving and maybe put in another lower high tomorrow or Thursday, whenever. We don't know. But what we can see is that price is moving bearish from a market structure perspective. So I'm going to maintain on the daily that we are bearish. All right. This one we'll do bearish. First thing I'm going to put is market structure. All right. Second thing I'm going to do is I'm going to look at the open price. Look at how prices open. Can you see how the bulls, whatever the bulls thought they had from the previous day into this close, whatever they thought they had from the open of this market, side to side, this is all they could conjure up. Therefore, there's the lower high. There's the lower high. There you go. Right there is what the bulls have shown us. Minimum momentum to the upside. Barely anything in there. All right. So from this point, you can see price has traded aggressively beneath the open. There we go. There's the open price. Boom. Off we go. Right. So I'm going to put in here that we are trading below open. Okay. All right. And also that we are trading below market structure. So trading below market structure, trading below open price, and also that we are potentially, I think that's fine. I think that's enough for us to kind of just show us that, yeah, you know, we're looking to continue bearish. So I'm happy with that. 4 hour. So at the moment, guys, my higher time frame at the moment suggests that the market is heavily bearish. But before I even do that, sorry, let me add one more. That price has taken previous day low. So we have taken the liquidity to the downside here. Boom. There we go. So previous day low has been taken. That's important. That's important. So the objective to the downside has been met. That means, guys, although we're bearish, that does mean it leaves us open to New York potentially reversing. There could be a potential reversal here because the objective to the downside has been met. Price moves from liquidity to liquidity. We have taken the liquidity to the downside. That means if price wants to, we're not saying it will, we don't know if it will, but if price wants to, in the New York session, it could turn and go that way if it wanted to, right? Well, obviously we would have to wait for confirmations and things like that in order for us to commit to something like that. We'd have to wait and see how things go. But what we do know is that we're trading aggressively beneath it. So for now, I like the idea that price is bearish. Okay. But I've taken that on board. That previous day low has been taken and sell side liquidity taken, which is important. Okay, so here's what I'm saying. At this moment, based on what I can see, just on the higher time frame, Higher time frame bias, watch this, bearish. That's my higher time frame bias. See the difference between today and yesterday? Yesterday, we were like, it's kind of showing us that it could be this, it could be that. That automatically kind of shows you that this is not probably a market for you to trade in. When you go, it could be this, it could be that, it could be that, it could be this, and there's too much confusion, it means the market really it's not clear. So the higher time frame usually will give us an indication whether the market is moving in the direction we want it to. All right. So let's go to 4 hour. See now, interesting. So now the 4 hour, again, you can see really nice and bearish engulfing candles. You can see FEGs being formed. I like the idea that price is trending. I like the idea that we are simply trending. And if anything, I'm just looking to continue this trend. I like the fact that there's not really much to go on here. Let me just check the monthly, again, the weekly. Yeah, I mean, for now, I like the idea that we are just simply trending. So I'm going to put in here 4 hour bearish. I don't know if I'm missing anything here, but I'm going to put 4 hour bearish, trending down. Right, I don't think there's anything more to say. We can see the engulfing candle patterns here from yesterday into today. Like it's just a simple trending market. Look at that, lower low, lower high, lower low. Right? If anything, price may put in a lower high again for us to go lower. That would be my thought process. So I'll keep an eye on it, and we will see how price moves. Okay. Let me get rid of you. Okay. Okay. Bring you back. There we go. All right, cool. So far, so good. So far, so good. 1 hour. All right. All we're doing is developing a bias, and I'm simply taking you through the crumbs. The market leaves some crumbs in the market. It leaves things like an order block respect, or like an engulfing candle pattern. These are all things that the market leaves. What else? Liquidity sweeps, taking out buy side liquidity, sell side liquidity. These are all things the market leaves. FEG taps, right? When the market hits an FEG, respects it, and then continues, right? And then even just market structure is important. You know, things like that make the difference. And then obviously how the candle formation, how the candle opens, closes, you get an idea of how prices move. So I'm using these crumbs, guys, in the market to determine my bias. That's all I'm doing. And I'm doing it from the monthly all the way to the 1 hour time frame. This will be where I confirm overall what my bias is for the day. And then from that point, I can then begin to drill in and look at other detailed things as to how we enter the market, how we take it more into an intricate place where we know exactly where to pinpoint our move for the day. Okay, so 1 hour, I'm going to say, oh, we don't know what the 1 hour is yet. Let's have a look and see what happens here. Okay, so now we bring the 1 hour in again. I can't really see why this can't be what we expect it to be, essentially. What I can see is that price yesterday, we pulled in over here. Okay, and so we're really trading between these levels. So really and truly, I'm looking for price either for a pullback to go lower, or for price, if it goes lower, then we look to go high. So for now, let's just wait and see, because my thought process is, number one, that we're bearish. I'm holding to a bearish bias, and I'm looking at the 1 hour continuing that move, unless price decides to do something completely different. We need to remind ourselves, before we keep on going here, let's just remind ourselves of, let me remove that, the fact that this is our open price. Okay, the price at this point, that is the open price. Open. This is the previous day low. All right. And this is current day high. All right. So now if I put this in perspective as to where price is, where price was, where price is, what price has taken out, and where price opened, all right, we can now look at this and go, well, it's going to take a lot. Price would, this is the open price. All right, so let's bring this in a little bit more. So maybe it might be helpful if I bring this a bit more this way. All right. Still not really doing it, but all right, cool. There we go. So here's what I'm thinking. For me, it would take price having to break this level to even make me consider buying it. I am not buying this market. I don't care what anyone says. For me, I'm staying out. If the market decides to move or reverse against London, I am staying out. I'm staying out of it because price has to give me a strong break for me to be interested in wanting to buy this, right? At this moment, I think the market favors the bears. But also at this moment, I don't think the 1 hour is indicating that it's ready to keep going lower. So we need to just be patient, allow price to show its hand, and then we can take things from there. So for me right now, I'm with the bears, especially because we've gone lower low, lower high, lower low. So if the market maintains its trending momentum, then it's likely price may put in a lower high somewhere, I don't know, anywhere. And it's for us then to pick up a move to continue the trend. I hope that makes sense. So for me, I'm staying bearish. Unless, so it's two things. Let me just confirm two things. If price breaks the high, then I think the bear idea is over. But I'm not even going to be in this, even if it breaks, even if it gets to this point and it's still bullish, I'm not involved to the upside because price needs to just show its hand. So I'm willing to just let the day pass again because I need clarity before we get into the market, all right? But if price comes in here and shows signs that it wants to keep going lower, that for me is a reason to get back in the market because we are already trending to the downside and we've taken previous day low. If price gives an indication of continual trending, then there's no reason why we can't get into this market. So yeah, so let's see how it plays out. I got an idea of where I want to get in and how price will play out, but let's just see how it goes, and then we can take from there. For me, I'm calling today bearish, and I'm maintaining bearish because I'm possible pullback to a premium level. In fact, let's just quickly do that. Premium fib level. Let's bring the fib tool into this because you want price from one point to the next to really go from, for example, from here to here. It would make sense for me for price to come back into this, especially if it's trending, somewhere within this zone to pick up a move to go lower, right? So we've gone from lower high, lower low. And if you want to be really picky, you could take it from the main bit here, but it doesn't really change too much in that sense, right? And therefore price could be pulling back for us to keep going lower. For me, I'm looking to go bearish in this market unless price breaks through current day high and aggressively above the open. Then I think we have a reason to then maybe assess. And at that point, it will be so clear that price has changed from a bearish move to a bullish move. So for now, not involved. Now, the other thing I do want to say is that if price does something like this and breaks lower, then easy. We continue the trend and we continue going lower. So there's two things that can happen. Price could pull back deeper into a premium level and then drop. Or price from here right now could break this current level and then we just look for the move to continue going lower. Either way, I'm bearish at this point in this market. This market for me is a bearish market and I don't plan on going against that. So yeah, that's it. That's it for me. I hope this session has helped. I hope you've learned something as well. And yeah, let's just keep going. Let's just assess the market. Take your time. Don't rush the entry. Maintain composure, and the rest will let the market come. Let the market come to you. I think that's the best way to trade. Allow the market to make its way to you rather than you trying to go ahead of it. And then you find that you get better results that way. So all the best in today's trading, and let's see how it goes. Cheers. See you later.